Hi, my name is Dan Blondal. I'm the CEO, founder of Nano One Materials here in the Vancouver area in Western Canada. Nano One is developing a industrial process technology to improve the cost and environmental footprint of battery production, focused on the lithium-ion battery cathode materials. That's where the lithium, the nickel, and the manganese all get mixed to make a functional material.
Dan, lovely to meet you. We've not met or spoken before, so I've been watching your story from afar. I'm intrigued by it. It sort of fits in with the thematic of the moment. But I'd love to sort of dig in and sort of try and understand where you started from and where you're going. So first of all, give us a bit of your background.
Yeah, so I'm actually an engineer, mechanical engineer by training, born and raised in actually Eastern Canada, Montreal, and then to the West with my family in the teens, and eventually studied mechanical engineering, and I've worked in a variety of different industries. Started in mining, was in medical devices, did a long stint with a company that was acquired by Kodak in the graphic arts industry. We kind of digitized the offset printing essentially, and led to the decline in print essentially. And then I took a move 10 years ago into the energy industry, recognizing that it was going to be big and a lot to do, and started in nuclear energy with a startup called General Fusion, and then kicked this off shortly thereafter in 2011, 2012 timeframe.
I wonder why. What happened in 2011? Right, you quite nicely outlined what you do today, but what did you set out to do? What problem did you think you were going to try and solve day one?
I think certainly when we started out day one, we had a novel way of making cathode materials. So we kind of were turning it a bit on its ear, how to make these cathode materials, and we started from scratch. This didn't come out of a university lab. It wasn't acquired from anyone else. It's homegrown intellectual property, and the notion was that we could drive down the cost, improve the simplicity of making cathode materials, which is the kind of the fundamental part of the cathode of the lithium-ion battery. And the business model was always, certainly from the beginning, was a licensing model, building out our patents, our know-how, our engineering plans, our people, to build partnerships and with the aspirations of licensing our technology to other players in the field.
That kind of feels like where you are today. But what I'm trying to get at is where did the idea come from, or where did the belief come from? You go, we can reduce the cost of this. We can do this. Industry's been doing it a long time, but we know more than they do, and we're going to drive the cost of this out. What was the genesis of that? What was that moment?
Well, first of all, I think industry's been very good at driving down costs using existing processes by optimization. So the inspiration comes from, in a way, kind of leapfrogging, changing the way things are done. And industry isn't necessarily good at that. They're good at optimization. So really, the innovative spirit tends to lie with smaller companies like Nano One, who are willing to take that risk. And the inspiration came not from me. I came in on the business side more than anything else, but from a scientific partner who had the initial inspiration, had done a fair amount of work in in battery materials, and had a fair amount of experience right from the early 1990s, late kind of 88 timeframe. And so that kind of led to the inspiration that there's got to be a better way to make these materials, and lo and behold, we are what we are today.
Right. That person still with you, or have they gone?
That person is no longer with us. So that was that person was on contract with us, and we parted ways. Oh, now it's probably a good 6-7 years ago, and built the team from that. But it was a contractual arrangement at the time.
Okay, so you've been brought inside on the business side of things. So I guess where I want to end up is trying to understand the commerciality here, okay? Because everyone loves a big idea, but at some point you guys got to make money, right? So you're talking about reducing cost, you're talking about a greener solution, boosting performance, all of those wonderful things. So you've gone out to industry and said, we think we can deliver this. And yet I noticed you've got a number of partnerships and collaborations going on. So again, where did that start? What did you need to prove to be able to have the kind of conversations that you're having today?
Obviously, we need to bring credibility to the table, and we had to build that credibility over time. And that started even way back in 2013, 14, 15 timeframe by doing a lot of evaluation work. So we would make very small amounts of cathode material at a laboratory scale, test them internally, and then validate them with our partners or with our potential partners or with the interested groups. And that means you send this little vial of powder out to whoever it might be, and they put it in a test cell and try to replicate the results that we had. And so there's been a lot of evolution in the battery space. Chemistries are kind of shifting every 2 years. There's a slight shifts in the chemistries, and we have tended to shift and even front run some of those. We've been in front of some of those trends. Our technology can make a variety of different cathode materials. So that's always made us a little bit future-proof in that sense, because we can shift with the trends. We can make all different types of cathode materials. So, but there's a tremendous amount of work, of course, getting it to that stage and going through those validation steps, and then shifting as the market shifts as well.
Well, so you're agnostic in that sense. I guess that definitely helps future-proof you. But it means that it means your partners need to as well. The people that you're collaborating with, they need to be able to adapt and change it too, or else those potential contracts disappear, right? Because it's a very competitive space that you're in. So can you tell us a little bit about the partners that you've got that are relevant? Sorry, and just for everyone, I'm just going to keep this at a very high level today because there's some new people new to the technology, new to the company. We're going to keep it relatively high level, and perhaps Dan can come in and we'll get a little bit more technical next time around. But let's just talk about some of those partnerships that you've established. So yeah, I mean, look, I think one of our most recent sort of partnerships that's very close to our space is a joint development agreement with Johnson Matthey, who most of your listeners will know is in the precious metal space, largely on the auto catalyst side of things. As that industry has been declining, they're coming into the cathode space. Very, very, very similar type of skill sets to work with both those kinds of materials, and we signed on with Johnson Matthey to develop a new generation of cathode materials, and that and using our technology. So this is making their materials using our process, and that's it, again, to drive down costs, improve the environmental footprint, et cetera. But the key thing here is that relationship took us 2 years to put in place, a whole bunch of evaluation. Obviously, putting these agreements in place requires a lot of legal back and forth. 6 months of action, a lot of testing, a lot of optimization of those tests for everyone to get a comfort level that the technology works. And so that's a typical cycle that we get to even before we get to a joint development agreement. And then you've got a couple of years of work to that have to kind of go get underway to get to proving points and no-go points in the relationship. Okay, so let's dive into this one, because that's the first name that you came up with. There's some others that people have been throwing at us. They want to talk to you. Want us to talk to you about. So Johnson Matthey, that it takes a couple of years once you've kind of agreed to start a process there. Again, what's the problem you're solving for them? Is it just your general banner of we'll reduce your costs and improve the product for you, and we'll greenify it for you? I mean, what's the sales pitch to someone like that, and what do they do with it? Because they're bound to have been having conversations with a few other people as well, aren't they? Or are you exclusive?
There's no exclusivity for either party. So we're certainly not aware of anyone else. They're doing the same thing we are with them, but they are actively involved on other fronts, obviously with many other companies. So the problem we're trying to solve is exactly what you said. We're helping them drive down costs, improve reduce complexity, improve the yield, the performance of the materials, and ultimately also the environmental footprint.
Right. Okay. So, and then when you decide to move forward with them, because everything just takes a little time to get to the point where you can actually, because you talked about royalty. That's the way that you're going to make money, right? You're going to license it out and charge a royalty fee.
Yeah, in terms of how it hashes out, it will be either a royalty or a joint venture that we're involved in, where we're either getting the royalty direct, or we become part of a joint venture and we license the technology into that joint venture or partnership, and then share in the revenues.
Right. Okay. But
in either case, you're basically licensing the technology into that.
That's what I was going, right. Okay. In which case, we're just moving things around a balance sheet at the moment, and maybe different wording on an agreement, because the amount that you're going to end up with is it going to be materially the same? Because they've got a big balance sheet, it's their material, it's their people, all of that kind of stuff, and you're licensing a process, right? So JV that's correct. Royalty, is it the same thing?
It's a slightly different thing, because in a royalty based scheme, we don't bear much of the operating costs or the ramp up costs, and the revenue streams are more limited. However, the margins are very, very high. In the case of a joint venture or a partnership, where we're partnering on an operation, we have revenues coming in. They're much higher than the royalties we would get. However, the margins are much lower. In the end, they come out to being roughly the same. Some chemistries and some partnerships may favor a pure royalty. Some may favor a revenue sharing partnership of some sort. But from our point of view, it requires us to license the technology into whatever that entity is, share it, transfer the technology, and the revenue will come in either one of those streams.
Right. Okay. So typically with JV structures, there's some risk, there's some liability, there's the need possibly to also raise capital, which has a cost implication, and it's a distraction, right? So I'm really just trying to get a sense of how you think, and if you want to be a purist and focus on your technology and expanding the number of partners, collaborations, JVs, or otherwise that you've got, or do you feel that you could be an industry player at some point because of the number of JVs that you've got going on, and that you're growing understanding and learning?
Yeah, I think in some cases there are opportunities for us to be an industry contributor, not a wholly independent operator, but an independent operator with strong partners up and down the supply chain, and perhaps even at that part of the supply chain. So, I'm hedgy about this only because we have different partners who think different ways as well. So we have to stay relatively nimble and flexible in terms of our business model.
Absolutely. But if I was getting some glimpse into the way that you and your board were thinking about, well, look, we can partner with a number of people. We can try and understand the processes up and down that food chain, and maybe at some point in the future, we'll know enough to maybe, be a different sort of company. That's where I was going with that. I'm just trying to say where you're at.
Correct. And it has evolved over time. We originally it was a pure kind of royalty type of scheme, and we've certainly evolved to a joint venture type of concepts as well. And then, on top of that, as we start to work at the bookends of the supply chain to create demand for our technology, this is working with the automotive companies and the big integrated miners who all benefit from a simplification of the midstream. And as we evolve those relationships, we are seeing opportunities to demonstrate our technology, perhaps in partnership with one of these big players, to really kickstart and create the change that's required in the midstream with our technology. And that would be, again, something that's seen as us being way more involved in the operations than a pure royalty play.
Right. Okay, that's useful to understand. You mentioned OEMs a second, and I do want to go there, and lots of people want me to go there. But just stick down with the cathode producers at the moment. Okay, you said you can straddle. You're agnostic. You can straddle a number of different designs. So the LNMO as well, with it says here undisclosed Asian cathode producer. Can't name names. I understand that. We get that a lot. But is it a similar setup to the Johnson and Matthey situation? Are they significantly larger? What's it look like?
as Asian companies tend to be, there's a sort of whole sort of agglomeration of different entities and stuff like that. And I think in some angles it could be larger than Johnson Matthey. In some ways you look at it might be smaller. Right? It kind of depends how you look at it, and that doesn't give your listeners any particular focus. But the arrangement there is very similar to Johnson Matthey. It's a collaborative arrangement to make a version of LNMO that is theirs using our technology, in the sense that we're working with Johnson Matthey to make a version of high nickel cathode materials that they have branded ELNO, using our process for making it.
Okay, and then again, same with you've got LFP as well in there as well. So again, is it a similar scenario with that partner? Yeah.
Yeah, with LFP, what's a little bit different there is that lithium iron phosphate, we're not changing. There's no particular formulation that we're going after. It's more of a generic. We can make all LFP better, and we're looking to. And right now, we're really excited about what's coming to the game in North America and potentially Europe as well. We've always believed that LFP would be a big player at the entry level and in the mass market electric vehicles, where total cost of ownership makes a huge difference to adoption. And LFP is the cheapest, safest, longest lasting material, and it gives the ultimately the consumer the best cost of ownership, the best warranty, essentially, and that we believe is coming now in a strong way, and we're well positioned in Canada and North America to help build that out. There's nothing here yet. There was something 20 years ago in Quebec, but it's now we're in a place now to really kind of build that up.
Yeah, we're seeing a lot of conversations around that, but I guess we'll see over the next 5 or 10 years what the use cases are and which designs actually win the day in different sectors. But so I just want to keep with that kind of column of cathode producers. What you're saying there is we have worked out across those 3 different technologies how our process can interact and deliver those benefits. We, with the licensing, JV or royalty model, will be able to work across the board with whoever. There's no exclusivity. You've said so far, but if you do, it'll be just normal process of it'll be by jurisdiction or region or et cetera, depending on how much that partner is willing to pay or where they operate. So nothing unusual there, right?
No, nothing unusual. I mean, look, if exclusivity comes with a price, and if someone's willing to pay it, and then I think we'd certainly give it consideration.
Right. Okay. Let's go to OEMs, because I think people got a little bit excited because there's a lot of projection, because there's a lot of kind of closed door black box with you, right? And people project, and I'm trying to get sort of nearer a sense of what the reality is. So OEMs, we've got, you mentioned Volkswagen there, and then you've got undisclosed US OEM. Everyone says that's Tesla, GM. Where do you, how do you help the market understand what it is that you're dealing with there? Because if it's a,
listen, it's a tricky situation. I think most of the OEMs, they have deep, complex relationships in their supply chain, and as we develop a relationship with them, they have to get to a comfort level about who we are before they make any announcements, because they don't want to undermine any of their existing supply chain relationships that are feeding the batteries today. And so that's a really important thing for them, and that's one of the reasons that they choose to keep things kind of under wraps until the relationships are more fully developed. So, in terms of what we're doing with the OEMs, as we've said pretty clearly in many of our kind of outreaching sort of narratives, we're working on next generation lithium-ion batteries, high nickel, high manganese. We believe soon to be LFP. And the focus is really on economics and supply chain, and that is proving out the cost models and the engineering models, and proving that these can be made with an appreciable improvement in the economic structure and simplification of the materials, and at the same time drive down that kind of environmental footprint and the carbon footprint associated with it. The challenge, and this is our challenge, what we're proposing is disruptive to the supply chain. We're proposing we can get rid of a chunk of the supply chain here, the conversion of nickels to nickel sulfates. And I won't get too technical on this, but if we can get rid of that part of the supply chain, that's where the majority of the cost reduction and the majority of the environmental footprint comes from. To adopt that means they've got to change kind of how they buy, how they purchase, where they get things from, and how they spec all of their input materials, and that is fundamentally disruptive. It's not a stretch to see it getting there, but it does require partnership up and down the supply chain and really an ecosystem that's willing to support it. And that's why we are actively working with the OEMs and the miners to create that need.
Right, but I want to come back there. I want to push you a little bit on it, because you're talking the language and narrative of a Tesla. You're talking about moving molecules the most efficient way. The whole green component here, first principles, and all that wonderful things. So if you're using that language, that is to attract the Teslas of this world. It would seem to us. Is that the case? Is that who your ultimate dream partner is?
Tesla, our ultimate dream partner. Look, I think any one of the large multinational OEMs is a dream partner. I think they would. Any one of them would be a complete sort of company changer in terms of a relationship that we can disclose and we can get that we can get the world excited about. I don't think there's a particularly dream partner. Certainly, Tesla has done a tremendous amount to move the market, and there's been lots of skeptics, of course, along the way. But they have, fundamentally changed things. I mean, look, the move to cleaner raw material supply chains, that largely was triggered by Elon Musk last summer when he said, "I need cleaner nickel. I need clean nickel." And that put a huge amount of wind in our sails because we have a solution that is clean nickel based. And so that kind of thing, I think visionary, that visionary component aligns very well with where we are, but we're also seeing that coming in a much quieter way from other OEMs as well. So look, the GMs and the Fords and the Volkswagens also have all of this embedded into their supply chain teams and their strategic supply chain teams. So but really Tesla triggered that, and all of a sudden everyone knows it's got to happen. And so that's ideal. But
there's two kind of things going on here. There's one, first rule of Fight Club is don't talk about Fight Club. I think you're doing a very good job there. But companies that try to align themselves with Tesla in the hope of I don't know, gaining something from it, some of the shine and the attention from it. I think that's not something that Tesla likes either, from what I've seen in the two instances that we've noted. So I appreciate you can't say much, but you can understand why people have made that link to you, because you talk the same language here. And it is what it is. Okay, so park it up. I just wanted to sort of see your poker face and see what we could get from you. With coming to miners, which this is the interesting bit. So coming right upstream here. You talked about nickel, and I remember the quote last year from Elon Musk for sure, because a few of the companies have been on here were the beneficiaries of that, like you. What's the conversation with those guys? Because miners need to do something different. They need innovation. They need to change the way they come about things, because for far too long it's been we've always done things this way. We will continue to do it this way. And you say they optimize, they don't necessarily innovate. So what's your message to them, or what are the conversations with companies? Is it the same thing? We'll save you money?
Well, at a pure basic level, I think obviously they miners, junior and fully integrated senior miners, want to be making a material that meets the spec of their customers at the end of the day. So at a fundamental level, we're working with these players to kind of define what that spec looks like for our process. So that's a fairly straightforward relationship. However, the large integrated miners are also trying to figure out how they play downstream. How, if this market is going to consolidate at all, is there an opportunity for them to make, rather than just make a metal product, can they make a battery specific product? So you saw BHP go into nickel sulfate down at their Nickel West plant in Australia. And that's probably the furthest downstream we've seen from any kind of integrated miner. They typically, they make their money, their highest profit margins are when they're just making metal and selling it. Anything after that pushes them into the midstream where the margins are far lower. And so I think the value proposition to the big integrated miners is, if we can get rid of the midstream conversion to nickel sulfate, let's say, and other materials, we can create a scenario where they don't have to give away as much of the premium to get it into a battery grade material. They've got battery grade material right there as far as we're concerned. And so by preserving some of that premium, it's more profitable for them. And I think ultimately that's the value proposition that really resonates. And of course, by getting rid of that, say, nickel sulfate conversion, we also solve a big environmental problem for them and for the whole sort of battery supply chain. And so that helps kind of green their product and in the fact that they're selling it into a cleaner supply chain. Right.
Okay. Can we get a little bit technical now? Do you mind?
Sure. Yeah.
And maybe I'll start off. Cool. Because I'm sort of intrigued as to what you're actually going to do for each one of these partners, clients, however you want to frame it, because you've got a process. You are demonstrating, I know you've got a ways to go, but you're demonstrating that it's working so far, and your expectation is that it will work. And you can go to these guys and say, right, okay, you can use our process. What does it do for them? Like if it's a miner, let's say, let's take a regular miner next door to you, and you say, right, okay, we've got something that's going to maybe able to save you some margin. It'll give you some green credentials. It'll, do it in terms of carbon taxes and all those wonderful things. And you'll be able to make more money and being in control of your process more, right? Whatever that is. So what do they do with your process? Where does it start? Where does it finish?
Yes. So, again, it differs a little bit from miner to miner. Everyone is certainly, when they're cash rich like they are now, they're always thinking about, like, where can we invest our money? Can we go downstream? Look, they're good at mining. They're not necessarily, miners aren't necessarily good at specialty chemicals and specialty materials that are downstream.
But they want to be there because it's a different multiple for them. And you've got lots of people coming on the show going, oh, we're a lithium chemical company now. We're not a miner. We've got a mine, but we're a chemical company because we get a 5 times multiple, not a 2 times multiple. So are you giving them the opportunity to do that?
Yes, essentially. So look, whether we see consolidation between the miners, refiners, and the cathode space, or we see maybe more consolidation downstream with the battery players, it does provide them a bigger reach into that higher multiple area, and I think that's where the interest lies. If it's taking them out of their core expertise and comfort zone, it takes them quite a while to move in that direction. But that is ultimately what the goal is. Now it can be done through partnership and joint venture as well, where we might be operating a plant that they're feeding, or it might be something that is assumed or brought into their kind of sort of organization as well. So that, whether we're doing that with the miners or we're building cathode demonstration facility with the OEMs, they're two very different beasts. And both of those things are out of their typical comfort zones, but they recognize that some collapse in the supply chain is necessary to drive this kind of change.
Okay, that's what I'm getting at. You're absolutely right. They're very, very different. So how do you help them get over the line there? Because but you're saying what to them? You're saying I know you do mining now, but we're going to radically change your ability to make money margin because we're going to allow you to go downstream. It's also going to have an effect on people's valuation of your company too. You give us some. You do what? How's the money component? How's the commercial component of this actually work? What does it look like?
Again, it depends on how it would be structured, and ideally, if they can protect the premiums they have in their basic, high purity, let's say metal powders, that is a big part of their goal. So if let's say it's investing in a Nano One facility that may even have another cathode producer attached to it as well. But that's one way I think they can see themselves, the miners kind of deploying capital to improve their business. And then the other way is to reach downstream, which miners talk a lot about, but very few ever do it. And reaching downstream to build out the specialty chemicals business, and in that case, it would be a license, a joint venture type of arrangement where Nano One's technology becomes part of the fold. Everything that happens, after you make this kind of high purity material, and then it gets converted into a cathode material. So in that case, it would either be it would be assumed into the mine. It would be spun out as a separate entity, operating entity, or it might be simply a commercial arrangement with Nano One and another partner.
Right, but you're doing all the heavy lifting for them because they don't know how. I'm trying to work out again. Is it a distraction or a real revenue opportunity for you guys? And your mining partner, but for you guys, and then what does that look like? Because you get a number of these things going, and it's an entirely different business, isn't it?
Well, I think from our point of view, it's actually not that very different. I mean, in every case, we have a module, let's call it a technology module, that we can plunk down, and we can make cathode materials for it. And the inputs we need come from the miners. Now, whether that's co-located at the miner, it's in the midstream, or it's at the OEM, that doesn't really make a difference to us. How the commercial arrangements end up looking is going to be different. But ultimately to Nano One, there's no technical distraction here. Doing it one way or the other. What there is an opportunity to bring in a world-leading partner that's cash rich, that can actually fund the technological change.
Right. Okay. So we've kind of dealt with the kind of the theory of this and the potential of this. If we come back to today, you've got a number of processes in place. So be careful. The word process is going to get conflated here a little bit. You've got a number of projects that you're going through: the Johnson Matthey, the Asian cathode partner, etc., the CBMM with niobium coating stuff that you're doing, St. Gobain, etc. So you've got a number of things going on there, and they're all relatively early stage. Which is the most advanced? Which is the nearest you being able to say to the market, "Hey, we've got some revenue coming in soon or next week"?
Well, look, I've said this. I've said this before. The Asian cathode producer, I think, we're probably closest there on some kind of a commercial arrangement related to the licensing of our technology. The sightlines on that are still kind of within reach, we believe, and we think can happen kind of in let's say Q1 of 2022. Is that what we're going into? Yes, 2022, and of course that would then lead to some kind of piloting activities, and ultimately build out of a facility that might begin generating revenues in the 2023-2024 timeframe. So there's obviously there's a license deal, there's build out, there's optimization, and then of course the revenues don't start flowing until there's materials coming off the end of some kind of production line. Right,
but you're not anywhere near understanding yourselves, let alone being able to tell the market what that quantum is, what that flow or projection is.
No, until the until the commercial agreement is in place, we cannot put those kind of targets in place because we don't know what the ramp up schedule is going to be. And it's really it's the marketing that needs to be put in place, and the demand for the materials, the offtake, and that's all going to play. That's all going to be part of the the commercial agreement that we put in place. We're not just going to license something and then sit and wait for our customers to work with it. We don't want to be put in that situation, nor do we want to put our investors in that situation. It's really going to have commercial marketing sight lines on it as part of the agreement. And once those are in place, I think we will then be able to bring some more accurate forecasting to revenues. But for now, we're at the stage we're at, and things are moving and progressing in the right direction.
Right. Who's next? Who's next on the list of priorities?
I would say that I think there's an opportunity particularly in North America to put a demonstration facility of sorts in place. We've seen this tidal wave really of interest coming not just from the OEMs, but from the governments and from the nationally, provincially, statewide in the US to build out that supply chain. And we think that some kind of a North American demonstration facility, we would love to see it in Canada, and we think there's an appetite for it in Canada, particularly because it's upstream and closer to mining anyways, and quite favorable. So while it's not I can't tell you with whom, but what I can tell you is that we think there's a strong possibility that we can bring some kind of a pilot or demonstration facility to the table in the coming year and a half kind of concept. And there will be more detail on that as we progress with the relationships we have, both with the OEMs and industry and with government. Okay.
So that sounds like a cost at the moment, but with the end goal that demonstration plant will allow you to sell to other partners, JVs, royalties, etc., in the North American region.
Yes,
that's the goal.
And that's the goal. And of course, with the buy-in, of course, you're not going to just build the football stadium and have people come, wait to sell tickets. I mean, we have to know the demand is there. So it's partly thing about timing. Like, well, getting the interest, of course, from the OEMs is going to be really important. Or maybe it's from a much smaller battery producer to go into, let's say, a niche market that can move faster than the automotives. That's perhaps how the whole thing starts. And so building out those relationships is very important.
Right. Okay. So coming back to the question with regards to revenues, it feels like the next 2 years is not revenue time, but it might be agreement time, as in an agreement to agree. Is it, or is it agreement to revenue?
No, it would be an agreement to license our technology is what it would be, or an agreement, let's say, to collaborate on the building of a facility. And those would then come with some kind of revenue projections.
Right. And so that's the North American thing. We're still talking about North America here, right?
That's anywhere. I mean, look,
right.
That would be the same with our Asian cathode producer as well.
Right, but you give me a timeline for that, so I understand where that could potentially go, and when you can potentially talk to the market about what that means, because scale, right? Because ultimately, at the end of this day, all these agreements are about getting commercial agreements in place, which you then can piece together and go, hey, do you know what? We're a $100 million a year revenue company, and that's going to ramp up or whatever. And I guess it's kind of, as an investor, you kind of like, right, well, I see some big names and some movement with this process that does well. You've advanced significantly in proving that it works across multiple designs, but we're not any clear in working out, well, what's that actually convert into in terms of cents and dollars, right? So that's the hard bit.
Well, and look, we have a whole bunch of different revenue models, and we can kind of look at, like, if we do this and this, and we're successful with this, as it ramps up, this is what the revenue models will look like, either in a joint venture case or in a pure royalty type.
But that's not public, right? You've got that internally.
No, at times we've kind of shared what that could look like, and but we don't. But the reality is, it's aspirational. It's not based on an agreement, right? It's this is what the market size is. We believe that if there's wide scale adoption of our technology, we can have aspirationally this much of the market share, and therefore it would generate this much of revenue.
Let's not have that conversation.
No, exactly. And look, those are we get asked about that, and we walk people through it, but without an agreement, none of that has any teeth at the end of the day. I totally get where you're coming from, but look, we are where we are, and I think the industry and our partnerships are developing all in the right direction, but we simply just can't put those kind of forecasts in place yet. That just until the agreements are there, the commercial agreements, and that'll be a company changer when that happens. That first kind of agreement will bring the confidence and the credibility, and we believe it will then lead to more agreements, because it'll create there'll be a rush on it, because people will recognize that it's got the stamp of approval on it, and we believe that's when things will really start to take off.
Right. Okay. And what are the other moments that we can maybe look to as investors looking in and say, look, do you know what? One or some of your partners have actually quantified what this could mean to their bottom line, how much money it could save, the increase of efficiency of the battery, or the longevity of the battery, or the cost, or quite frankly, these days people are able to apply what the kind of greening of the project can do for their business. Because I know you can't give us those numbers, but are you getting any of the people that you're working with, customers that you're working with, or clients that you're working with, say, look, I think this could mean X to us in terms of dollar terms, or percentage terms, or market terms, or however are they at that stage yet themselves?
Well, we're at a stage where we're modeling all that out, and we hired Hatch Engineering to actually take our models and apply a really professional sort of finish to it, and take it to a higher level of detail than we can do internally at Nano One. And so what that does is for instance, the work we're doing with them right now is about looking at the way cathode materials are made today, and the way we plan to make them, and assessing the differences, and looking at where the opportunities for cost reduction are. We believe at Nano One, from what we've seen, that we can reduce costs by many thousands of dollars per ton. Now that's going to vary depending on what you're comparing it to, what jurisdiction you're comparing it to. So that's kind of why we leave it kind of loose like that. But and certainly as the nickel prices go up and the lithium prices go up, we have even a stronger narrative, because the gap in cost structure gets bigger, and we bring a bigger amount of savings to the table as those things go up. So that certainly works in our favor, and it really comes down to fairly simple math. There's a cost to converting nickel to nickel sulfate and lithium carbonate to lithium hydroxide, and that's the majority of the cost cost savings that we're bringing. There's also an environmental footprint associated with those. It's very easy to calculate. You're quintupling the weight of nickel when you add sulfate, and that has an environmental footprint. There's an energy cost to doing it, and that has a very obvious environmental footprint. And so those savings are notionally very easy for the miners and the OEMs to understand. Quantifying it down to the CapEx and the OpEx gets down into the nuts and bolts, and that's what we've done a fair amount of work with that, and we have a good understanding of it. And Hatch is now kind of taking that to a new level.
So where's the competition coming from for you?
Look, it's coming from all angles. Not as much kind of in the cathode space. I mean, we're trying to partner with our competitors essentially in the cathode space. So that's working with the Johnson Mattheys of the world, of course. But I think the competition. We don't see a lot of competition from a supply chain change, other than maybe Tesla has said we're trying to change the supply chain. So they announced it at a Tesla Battery Day last year, and we haven't seen much out of them since then. But we're not underestimating their ability to make those kind of changes. So look, there are companies like that have very big sources of capital and ability to move mountains, and those are we seek to partner and with companies like that at the same time as kind of I wouldn't say outrace them, but do stuff in parallel. Look, if Tesla comes to the table and we're not with them, we want to be with the other partners. So that's why it's really important for us to be working with everyone at the same time, because each group will choose its path, and we believe we have one of the fundamental sort of bits of technology that will improve that path. I don't know if that makes sense. It's a bit esoteric.
Well, look, I guess it's a difficult one to, you don't want to be pitching your competitors. But I'm just wondering, like, technology is technology, and it's always been the case that a better technology comes along at some point. There'll be different battery designs and different use cases, and Tesla, a bit like Apple, may want their own, intellectual property in their product, and the big OEMs will be working hard to do what they can to optimize everything. So I just wonder where you sort of see the securest point to be in the food chain. Is it with the miners? Because if you can get in early there, one, because they don't have those skill sets, they're not very technical, and they know what they know, versus what is a very highly sophisticated audience down at the Teslas of this world. Do you feel equally safe along that whole supply chain, or do you think that perhaps you need to, get focused?
Well, I think, as I've said before, I said this earlier, by working at either end of the supply chain, we're really creating demand for our technology, recognizing that we will only be able to fulfill that demand by working in the midstream with the Johnson Mattheys of the world. And so it's really a multi-pronged approach strategically. And it enables us to stay current with all of the trends. It enables us to work.
What's that mean? What do you mean by that?
Well, the trends in terms of where the supply chain is going. So what are the auto co's thinking? Are we going to do it the same? Are they thinking, are we going to do this the same way they're doing it in China, and just kind of rubber stamp what they're doing and trying to put it here? Or are we going to try to change the way things are done to sort of give us an edge? And are they going to be putting? Are they going to be buying up nickel sulfate or mixed MHP, mixed hydroxide product, or various other things to feed their supply chain? Is that a short-term strategy with the long-term of actually getting rid of all that midstream stuff? We can guess at what that is, but it's only through our relationships with the OEMs and with the miners that we can really kind of get a really kind of deep view on those kind of trends in the supply chain. And then the other trends, of course, are related to the chemistries, the LFP, the manganese rich, the nickel rich materials. There's still a lot of I would say uncertainty which way it's going to go. We believe they'll all play a role. They're all fundamentally important to the battery space. There are they serve many different needs, and none of them serve all needs. So they will be strategically important going forward. So understanding those trends is really important as well, because it helps us focus where we put our research and our development dollars as well, and who we partner with, because we want to be in all of those spaces, because our technology allows us to be. We can make all of them, and we can bring about the changes that we think in the long run will be very attractive to the whole supply chain. Okay,
so no one else is doing what you're doing.
No, it's there are people playing the cathode space trying to bring in. Let's say that there are equipment manufacturers, and there are plays in the space that improve the process, improve parts of the process, but no one is really looking at the process, the ways of making cathode materials for the sake of changing the supply chain. I think that's fundamentally how we differ from everyone else. There are lots of people are betting on, let's say, a new piece of kit to improve the way cathode materials are made, a new piece of kit to improve the way a battery is made, but really to fundamentally change how we build environmentally effective and cost-effective supply chains. That requires a fundamental shift in the way we assemble all of these raw materials, and that's unique to Nano One.
Well, yeah. So either you're wrong, or you get to put your price list any which way you want, because there's only one of you.
Yeah, look, the big cathode producers, certainly if you think of the European ones, which are Umicore, BASF, Johnson Matthey, Haldor Topsoe, these are all, and actually, funny enough, they're all auto catalyst players as well. So they all come out of the auto catalyst industry, and then you've got your players in the more traditional ones in Japan come out of the ceramics industry, the Sumitomo Metal Mining, et cetera. They're all fundamentally interested in supply chain change, but they are operationally driven to deliver today. And so the working with us helps them, in a way, look to the future for the next generation of materials. And that's kind of I think that's kind of the relationship we're building with Johnson Matthey. But they, of course, are looking for ways to improve a supply chain, and they are very interested in what we can bring to the table for that. But they're also our competition at the end of the day. So we have to work very carefully with them. We'd rather be in the fold than out of the fold.
Well, that's kind of what I meant. I'm trying to understand what the tensions are, because they are also competitors to you in different ways. But you've got an opportunity to price this right for the market, because they'll design you out of the system process if you're too expensive, right? So in terms of the use cases, like if I look at automotive design, to implement and make changes, it takes a long time. It's 5-7 years. I don't know if that's the case with the batteries. You'll have to tell me. So what are the other use cases? I read a few in your PowerPoint, that you are honing in on in terms of the battery use cases that you think you can help companies with today, because if they're producing money today, they're paying you more money today rather than some kind of licensing fee agreement where they kind of ramp it up over a long period of years.
Yeah. So obviously the most attractive and visible and noisiest customers are the big automotive companies. But you're right, it's 5 to 7 year design cycles, so you're always planning way out. There are other battery driven industries that have much faster design cycles. So power tools, for instance, is an interesting one. Their design cycles are measured in months, not in half decades. And so having a way to so we think, for instance, our high voltage spinel, the manganese rich material, is very suited to that kind of industry, and we do have relationships with some of the big power tool companies, exploring ways to use this kind of next generation material. The higher voltage would allow them to use fewer cells in a battery pack in your drill, and that of course simplifies things quite a bit. And I think that ultimately that would be that's the real driver. Having a high power battery like the spinel is also very important. So it's really a power driven cell. It delivers energy really quickly and can be charged very quickly. And that's the most, well, other than safety, that's probably the most important thing for these power tools. So there's an example of a relatively rapidly expanding and market sector, and one that is willing to now invest in technology. Really, until quite recently, they would just pull cells off the shelf and put them together. We're seeing, like the auto producers, we're seeing an industry that is now willing to prototype and design cells and look at chemistries to make a better package for their customers. So that kind of upstream design philosophy that we're now seeing kind of creeping into the auto space is also creeping into some smaller markets who traditionally couldn't afford it. They couldn't afford to take those kind of technological risks. So they just bought something off the shelf, packaged it together. Like Apple and Samsung, and they did it years ago. and we're starting to now see these other industries starting to think upstream and how they can integrate the battery and just make a slimmer or more energy intensive product by designing not just the package, but the cell and ultimately the chemistry that goes into it.
Right, and so obviously OEMs, we're talking car, truck, lorry. Maybe even kind of long-term storage solutions there. With these kind of smaller, like power drills and I don't know what are other kind of electrical use type applications that you're going to be able to talk to. What's that equate to in terms of size of the market? Because again, if it's like it's revenue now, but it's a much smaller market versus the big opportunity of where we're going to be in 5-7 years with the OEMs. I mean, is there?
Well, look, they pale in comparison to the revenue opportunities. I mean, with the OEMs, we're an OEM, an automotive scale cathode manufacturing entity would be 30, 40, 50,000 tons a year. Power tools would be, you'd be pushing it if it was 10. I mean, it's a very small, it's a much smaller number.
But it's money today.
Yeah, I mean, there's just the smaller batteries. There's fewer of them around, right? At the end of the day, in between those are these industrial applications for batteries as well. So forklifts, buses, port vehicles, fleet vehicles like that maybe don't have the massive volumes that you would see with the big OEMs, but they have they do have captive markets and they can move things relatively quickly. The issue is that very few of them are willing to take technological risk in their supply chain. So what you really have to do is you have to build this consortium of players that are willing to come together to take that technological risk collectively, and that is, we're starting to see that kind of thing happen jurisdictionally. So we just joined this group, the Accelerate ZEV, which is a zero emission vehicle initiative in Canada. And in that, you have everyone in the supply chain kind of coming together. Okay, the big OEMs, but there's also electric bus companies and there's miners, big and small in there. And really the idea is, how can we come together to affect change, to bring to basically de-risk the technological shift that needs to happen in order to benefit all of us. And that collective action is starting to spring up in all kinds of places. We're privy to it, of course, in North America because it's closer to home, but you see it in the UK and all kinds of other places as well. So and that enables the smaller player to adopt a technology like Nano One's, because it's done collectively with their peers.
Yeah. Okay. That makes sense. Oh, crikey. I'm just conscious of time here. I could probably speak to you for another 4 hours or more. It's truly fascinating. And we didn't even I said, oh, let's get technical. And then I didn't. I want to talk about the coated single crystal stuff and, what it actually does, at a micro level. But thank you very much. That's a real eye opener in terms of some ideas, the problems that you're solving, some of the people that you're working with, and and trying to understand a little bit more about how you guys think and the way the business is or needs to evolve to kind of capture the commercial imperatives that you are going to need to capture downstream or further down the line, and at the same time the selling that you're going to have to do. Does that mean you're going to sort of have to start to hire new types of skill sets and get new types of board members, new types of people at the operational level for you?
Yeah, look, the growth to date has largely been really down in the ranks, trying to build out a young technical team. But I think you'll see over the coming months the kind of people we're putting in place. At the board level, it's mostly we're graduated to the TSX. Where there's a whole bunch of regulatory obligations and and of course we have to meet some of the guidelines put forth by the oversight agencies like Glass Lewis and ISS. So we'll be making changes there to improve that. But really, it's going to be at the kind of at the senior management team level that we're going to be putting some horsepower in place, government reach, manufacturing expertise, and things like that, and because they're fundamentally important to building out that that kind of ecosystem, that collaborative environment that I just spoke of.
Yeah, I'm intrigued by the kind of the what the commercial team, the biz dev team actually ends up looking like, because you've got lots of different types of conversations going on at the moment with different verticals, and it can be complicated. But look, Dan, I won't take any more of your time. Loved it. Come on again soon. Great conversation. Thank you very much.
Thanks. Really, it's great meeting you, and a great first chat, and I look forward to the next one.